What a historic week for the markets and for the world. President Trump hosted a peace summit with President Zelensky and members of the European Union, possibly inching closer to a peace deal with Russia and Ukraine. Fed Powell restructured the Fed's policy, marking a significant pivot at Jackson Hole. Hey guys, this is Samir, and let's just get right into it.
I have a feeling you and President Putin are going to work something out.
And the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
So what does that mean exactly? What is the Fed's policy and what is the Fed? So the Fed's policy, it's a dual mandate which was given by Congress. Their two mandates are to foster maximum employment, meaning reaching the highest level of employment without causing inflation, and ensuring price stability. Typically, they want to have a long-term inflation rate of about 2%. But with this last meeting that they had at the Jackson Hole Symposium, they kind of revised their framework. And what is it and why did they do that? Well, at this current point in time, the Fed has a monetary implication. The problem that they're facing is balancing upside inflation with downside employment. So unfortunately, tariffs are pushing the price of certain baskets of goods higher. Now again, this is just for a certain basket of goods. Fortunately, the Fed sees tariff-driven inflation as short-lived, maybe a quick spike or a blip in time. Another plus that they have going on right now is unemployment has been pretty consistent. It's been hovering around 4 to 4.2% for over a year now. So when we go into the revised framework that Fed Powell was just talking about, what does it mean exactly? So they're still targeting long-term inflation rate of change for 2%, but they are going to be flexible and they aren't going to be overreacting to any short-term deviations. Now again, why is that important? There are going to be costs for tariffs. For example, this was provided by analysts at Goldman Sachs, their researchers, and it shows that currently businesses did take on a bulk of the cost of tariffs, about 64% for the cost of tariffs in June, but they are kind of estimating that by sometime of October, it may be passed on to consumers. So where the consumers may get a bulk of that tariff of about 67%. So what does that mean? That's kind of why the Fed has revised their framework, because if there is an uptick of inflation month over month, when this does happen, they won't be increasing the Fed funds rate. They're not going to be going into a quantitative easing cycle and then potentially increase the rates again. Another thing I want to underscore is we can see that the unemployment rate, the civilian unemployment rate, has been hovering around that 4%. One thing though that I kind of want to underscore with unemployment is, now this is U3 unemployment. When we take a look at the labor force participation rate, we can see that it's kind of been dropping off. We have right around about 62% labor force participation rate. Now, what does this mean? This means maybe a lot of people in the workforce may be retiring earlier. It can also mean a lot of people are not necessarily looking for work. So again, with the U3 unemployment, it has been consistent, but when we account U6 unemployment, which may include discouraged workers and long-term unemployment, unfortunately, that trend has been upticking, so that is something we want to be watching. So first things first, I kind of want to go over earnings for this week. So for Monday, we don't really have much going on. Tuesday, it looks like we do have some banks. We have Okta, MongoDB, tech company in the database. On Wednesday, though, we have NVIDIA, heavy hitter. NVIDIA accounts for 8% of the S&P, so it's going to be very important kind of seeing what they're saying after close. There's been some scrutiny with the H20 chips in China, as well as a potential for a shortage in the GPU space. So definitely want to tune into that, see what they got to say about that. We have Snow after hours as well, CrowdStrike, HP, some tech companies. CrowdStrike, definitely want to get an understanding of what's going on in the cybersecurity realm. Rates are still a bit elevated, so it's no surprise that usually one of the first things that it's going to be cut in terms of cost for a company is going to be the cybersecurity space. So definitely want to tune into their earnings as well to get a better understanding of how they've been circumventing this. Thursday, again, we have some tech companies. We got Dell, Best Buy, some consumer discretionary as well, Dick's Sporting Goods, Burlington, some retailers, Dollar General. Um, and Friday, kind of a slower day as well. Kind of looking forward to Baba's earning call, kind of similar to Amazon. So I kind of want to get an understanding of the e-commerce space from their perspective for the Asia Pacific regions. In terms of economic events, we are passing Jackson Hole Summit. So that was probably the biggest thing going on for this year. We do have some red folder events still going into next week. We do have JOLTS, ISM manufacturing, ADP non-farm payroll, and then unemployment claims as well. We may see some kind of an uptick here, but for the most part, unemployment claims have been pretty steady around 4 to 4.2% for over a year now. So probably will continue that trend. We also do have the average hourly earnings, non-farm employment change, and the unemployment rate closing out the week on Friday. So getting into it, as you can tell by the heat map, finished pretty green, pretty strong. This was from the pivot from Fed Jerome Powell's stance in the Jackson Hole Symposium from the start. Kind of did hint towards the rate cut coming in September. Now, this is the entire stock map, so you can see the entire U.S. stock market pretty strong after those comments. We can see we did have a bit of a pullback. We did have a bit of a blip of a 1% pullback, over 1%, but we did finish the week out strong. We do have this hammer candle here, as well as closing on that Friday. It was a 1.5% day, about 1.5%. So we did kind of make up for about 1, 2, 3, 4, 5 down days. So that's pretty strong of a move. And if we were to kind of maybe measure this out or put it in this kind of channel here, I would say can be looking to hit this upper bound of 6,600 probably in September. Just because of this momentum, it looks like we are setting a lower high in this trend count after going sideways for this period of time here. So we came through here, flagged, made a continued the bull flag, and then came into this channel, and we've been consolidating pretty well within this range. So after that good news, I would not anticipate any more downside momentum. Now, if we go down to like the hourly time frame, we may see a different story here, where of course there is this price inefficiency here. And last week I also kind of mentioned where we had that 4-hour inefficiency and if we were to go there or not because there was a squeeze. So we did in fact go there. We did in fact fill that inefficiency and pop up. Do we have to come back next week to fill this inefficiency? No, and I'd actually say that we're not, just because it was such a monumental thing that happened at Jackson Hole. It really set the tone. So this is more of a fundamental gap, in my opinion, and it's not really even a gap when you look at it on a daily time frame or a weekly time frame. So the smaller the time frame, the noisier it gets. So from my opinion, my stance is that this will probably not get filled next week, and we're just going to kind of continue to uptrend, in my opinion. Kind of similar story here, not as strong. So in terms of the tech sector for the futures market, but we are in this channel. We are holding pretty well. Hit the bottom of the range, and we did bounce. Still finished very strong, over 1.5% day. We did kind of pull back a little bit, but this is all in all, it's a very strong finish for the week. And in terms of a weekly time frame as well, that is pretty strong. It would have been a lot stronger if the buyers could step up and finish in the green. But who knows? It could have just been a time thing where no more time. Bell, closing bell. So the VIX was uptrending leading into Jackson Hole, and then it just kind of sold off, which is kind of peculiar, kind of different than what usually happens during this time of year for the seasonality. Uh, End of August going into September, you usually see an uptick. It looks like maybe seasonally speaking, this may be a little bit different. We may actually may finish strong in August, and we may finish strong in September as well, which kind of is a counterintuitive counter trend to uh, what the norm is. Taking a look at the SPY, kind of similar to, of course, the ES, finishing strong, 1.5% on the close for the Friday. Again, taking out 1, 2, 3, 4, 5 days of 5 down days within that one day. So my assumption is we have a lot of momentum here for this breakout, and we're just going to kind of continue to the upside going into next week, finishing the month of August strong and starting September off strong as well. Again, you can kind of see this with the weekly time frame as well. Very strong finish in terms of pulling back about 2%. If we go from the highs of the week to the lows, we're pulling back 2%, and then still closing green on that week, up 0.29%. So I wouldn't consider this a hanging man by any means whatsoever. I would consider this a kind of like a retest of this level here, where this is a base. And again, more than anything, in terms of when you kind of look at technicals, look at the fundamentals. And with rate cuts now kind of being hinted at, I definitely think that we're just going to kind of continue to move along in this upward trajectory, especially with the VIX going down. It's kind of that traditional summer trading where the VIX will kind of grind down, and you'll kind of get that choppy move higher, which is kind of what I'm anticipating. And if kind of take a look at this, you may see it, you may not see it. We're in this very, very tight trend channel right here, up to here, and similarly enough over here as well. So it looks like the way I've been seeing price lately, studying the price action, price actually has been moving in some tight forms, in some tight channels, and even if we were to kind of zoom out a little bit more and take it as a whole, it kind of has been in a pretty tight channel overall. And I'll show you that in some of the Mag 7s as well. But yeah, my assumption is continued upside going into next week. Take a look at the Qs. I kind of already was playing around with it, but it's kind of been in this channel and kind of bouncing off that channel. Again, finished very strong, 1.54%. S&P and the Qs kind of heavily favor the Mag 7. They both kind of mirror each other to that extent because it's just so weighted with the Mag 7. You got this traditional kind of double bottom right here. Upper bound probably going to be around this 588, 590 whole number, psychological number, what I would anticipate. And then eventually that 600 level, which may be a make or break going into September, October, but we'll kind of cross that bridge when we get there. Video. Now, last week I kind of was mentioning how I kind of was looking at this and I kind of noticed that there was this diamond formation going on here, and kind of was thinking, is this going to be an instance with some of the things going on with the company, with China, the H20 chips, possibility for shortage in the GPU space? Is it possible for, excuse me, for them to beat earnings, maybe not have the best guidance because of factors that are out of their control and maybe a sell the news, especially considering we are at this very close to the psychological $200 level, which also coincides with $5 trillion market cap. But nonetheless, going into Jackson Hole, we actually did see this diamond formation break out the diamond top to the downside, but then it did get bought up. But if we were to take it from the highest point for that week to the lowest point, we actually almost had a bit of a correction. It's about 7.5%, 8%, 8% kind of like a pullback, maybe like a correction, depending on things. But nonetheless, it did get bought up really, really well the same day. A lot of volume. Volume was 215 comparative to the selling volume the day before of 185. And we are kind of broadening out over here where we may be entering a price discovery phase from this instance. And price may come and retest here. It's right around earnings too. So we'll kind of see. But for me personally, with NVIDIA, I'm just holding shares long of it. Whenever there is some kind of a pullback, I do accumulate shares. Their PEG ratio is pretty low comparatively. So overall, it's a relatively inexpensive stock company, and they've been absolutely crushing every earnings. So my biggest concern is not necessarily hitting the metrics, hitting the numbers, but the macro concerns more than anything. So Microsoft kind of went down a little bit, but then was bought up as well. Now, one thing I kind of wanted to mention last week, I was mentioning how this is kind of textbook distribution. We have these wicks, and it did kind of drop, and it did finish a little bit weaker than, like, let's say NVIDIA for the week. But this is what I want to highlight as well. What I was alluding to when we were looking at SPY. Look at this trend channel. I didn't really notice it until a bit later, but look at that. You just look at this, and this is on the weekly time frame. Look at how tight that trend channel is, you know? So it broke out, and after breaking out above this range, it was just in this super tight trend channel. Super tight. And then it kind of continued. So we were in this super tight trend channel, and then we had another breakout. So here's the initial impulse move, right? Which is an earnings gap up. And then we were in this trend channel for some duration of time. Then we had another gap up, and then we entered another trend channel all the way until earnings again. And then that's kind of where, I mean, it was a massive gap up. They crushed earnings, and I think it was up like 15%. No, it was up like 7%. Actually, we go from the lows to the highs. It was up 8.88%, and then it was kind of selling off. And of course, this was all at this point more of a correction from not necessarily the fundamentals of the company, but more of the macro environment, the headwinds of going into Jackson Hole Symposium. Apple. Now, Apple had a pretty good pullback here in terms of after this gap up, and we had this retracement. It's finding a base here. It would be nice for it to kind of flag like this and then continue to the upside. It has some things going for it right now in terms of they are in the process of making the Siri humanoid AGI. They have new phones coming out, 2027 hardware lineup. Those phones as well are going to be coming out from their manufacturing plants in India, and they are in talks with Google for using Gemini for Siri. So they have like a lot of positive news, positive sentiment going for them. Now, if we were to pull it back like this, you could see that came to a nice level, kind of between the 78.6 and 61.8, which may offer a higher low in this trend sequence and continued upside expansion. But again, sometimes with Apple, it's a bigger company. You can't really move like some of these high growth companies. So we may see it go sideways as well. So I'm perfectly content with just kind of holding shares. And if it were to come back and retest this level here, accumulate more shares. But from my perspective, I found this more of a fundamental shift in the company. So I don't really see it coming back here right now because of the fact of this was a pretty substantial week where Tim Cook was at the White House. He announced they're going to be manufacturing in the United States, and the tariffs were no longer going to be affecting iPhone production that are coming, the tariffs on India. So that's why I consider this a fundamental shift where it may just be a kind of like a gap and go type of scenario here for Apple. Tesla. Tesla finished out really strong as well. Kind of still in this range. Seasonally speaking, from historic price action and charts I've looked at, Tesla does okay in the month of September, but it really picks up in the month of October. So my eyes are kind of looking for a move in Tesla in October through October until January. So this may just be a consolidation, and then we may see a trending phase in October throughout January. And I think that also kind of aligns with when Elon Musk gets his compensation package, as well as where they'll be kind of having earnings in October as well. They may have some catalysts coming out. But again, this is just speculation. I'm kind of just long on these companies because they're good companies. They provide good services and goods, hardware, goods, and services. If you consider robotaxi like a service, if you consider the car a hardware good. So either way, that is a bit more of a speculatory stance on what I just said, but that's just kind of for other reasons. Now, Amazon, let me kind of clear this up a little bit. I was tracking it for some time. It did kind of fill this gap after the earnings gap down. Unfortunately, one may make the argument it did hit a higher low on the daily time frame, and we kind of are in this area of price kind of contracting, where we might kind of be forming this maybe a symmetrical triangle, maybe a wedge of sorts, but that's not necessarily a bad thing. That just means that the stock has absorbed this volatility, and it's going to lessen its volatility and find price equilibrium between buyers and sellers, meaning this price range, because it's a liquid, it's a liquid, it's not going to be just stagnant. But if we were to say, like this range of 230 to 220 is an equilibrium for the company, which it may in fact be, which is kind of what we've been seeing with Tesla as well, where it's been kind of the volatility of the stock has been dwindling, but we are entering a phase of equilibrium between buying and selling, where price is reaching a point where it's fairly assessed for the company at this given time. Google. Google has been breaking out. It's at all-time highs. It broke to 208, 207, 208. So it broke all-time highs and pulled back a little bit. But it's just been moving very, very well. Very consistently, very well. Not a lot of volatility in it. Something if you picked up during the April lows, March lows, it kind of just held it, buy and hold, long term. Very good company, no complaints. Been doing very well. There was a little bit of a scare with ad search and how their ad revenue may be dropping as a result of large language models, but they did disprove that. And actually, their refute was, excuse me, their refute was that their ad search has been increasing their ad revenue, which is a great sign. And again, kind of the partnership with Apple, it's going to be good news for them. One last thing that kind of they're dealing with is the I think they are under investigation with the Department of Justice for I think Google as a whole, like the Google search being a monopoly of sorts. So once that kind of gets squared away, I think Google will kind of just be chugging along to the upside. Meta. Now Meta finished the week out red, and I think this is because they did have an announcement where they are going to be getting rid of laying off some of their AI workforce. Um, or not laying off, my apologies, fake news. They are freezing the hiring in its AI division and kind of restricting team transfers. So, what does that mean? Well, they're kind of probably cutting down on or freezing the AI division, hiring of their AI division because they just acquired um, one of like the leads from OpenAI, if I'm not mistaken. And between that and the expansion, they need to kind of, you know, buckle down on their capital expenditure. There's nothing wrong with that. Now, in terms of the restricted team transfers, this may just be kind of siloing um, some of the members because they may be working on some kind of a black box project here. Someone may be working on a black box project there, and sometimes you don't really want them to share that sensitive information across the spectrum. Either way, um, still pretty long on it. There's nothing to say about that. So the dollar has been going down as a result of some of the macro political things going on. The dollar is kind of weakening. Assets are strengthening. Gold has been increasing. If we were to take a look at gold, it had a bit of a breakout as well. Now some of the magnet levels is around, I think it's like 320 to 330. If we were to look at unusual option flows, um, but it has been contracting in this area as well, and there was a squeeze on it. Uh, but uh, an asset such as gold, something you can always hold. It's a good hedge against inflation, and it had a base. It was basing for a long time. Think about it. This is an ETF, but if we were to look at gold itself, like futures, um, basing, guys, basing since the 30s. And then had a breakout Bretton Woods, um, got off the gold standard, etc., etc. But overall, it's been uptrending for sure. And that's just due to the nature of um, the dollar as a note. Nothing to say about it. Just macroeconomics. Let's see. So one or two things I want to look at. Oh, Palantir. Now Palantir dropped significantly. Now, if there was one that corrected, it was definitely Palantir. Um, it dropped 25%, 24.55%. Palantir priced at perfection. Definitely got bought up. Nothing to say here. Me personally, I would err on the side of caution. Just because they are priced to perfection, they have to essentially every earnings for until I'm a grandpa has to be perfect. Just because of their pricing. With that said, Goldman Sachs did come out say buy the dip in momentum stocks, and this is one of the momentum stocks. Um, and this was a pretty sizable correction to kind of get in at. Now, if you were pretty much new money long here, you'd be like, what the heck? Like, I just got in here, it dropped 24%. Well, yeah, but at the same time, if you're doing your due diligence and you kind of are understanding the company, understanding the financials of the company, the mission statement of the company, then this drop wouldn't surprise you at all because the stock is going to move up and down as long as it has a core financials. You shouldn't be too overly concerned about it. Another one I kind of want to take a look at real quick is Adobe. Now, Adobe hit my radar. It's kind of undervalued in my opinion when we look at the financials of it. It is uptrending. it's kind of at one of the lowest levels that we've seen since like 2023, 2020. Now, one can make the argument generative AI, images, videos, etc., is going to kind of take away market share from Adobe. But Adobe has been incorporating it very well into their suite. They do have a moat. That suite, especially for professionals. Professional grade software will kind of be using Adobe. And also, you may run into some questionabilities with copyrights when, let's say I were to use a generative AI online to generate an image. I can't necessarily use it for monetary gain because where does this sit in terms of copyright? So that's kind of where I think with Adobe, they kind of still have a bit of that moat. But overall, free cash flow is really good. Free cash flow is very good. It's at a very low level. Fundamentally speaking, it's still pretty sound. I think it should be fine in the midterm, near term to midterm, maybe longer term. We may get to a point where it's like maybe it's affecting the moat, but as of right now, it has 80% of the market share, and it's still maintaining that 80% of the market share. So I'm pretty much going long here with Adobe. Acquired some shares here. All right, guys, and that's kind of all we got for the video today. Please be sure to drop a like, subscribe, comment if you liked it, if you didn't like it, and I'll see you next time.